Watch out, first-time home buying is stressful enough without having to worry about all the expensive mistakes you could possibly make. I got your back though, guys. I'll give you all the costly money, mortgage, and market mistakes you should watch out for and how you can avoid each and every one. All those 3 M's, or MMM as I like to call them, are in our video today. MMM, wonder if that made sense. Money, mortgage, market. What did y'all think about my little MMM? Well, I thought it was funny. Real quick, what's up to all of my returning subscribers? This is Pierre Meji, and in this channel we just give out free value that has everything to do with real estate, becoming a realtor, an apartment locator if that's your sub niche, and really just everything to do with the real estate market and how to scale your business as a real estate agent. But anyways, let's just get right into it. Oh my gosh, you can't wait to buy your first house, right? That's what everyone thinks at first when they're buying their first property, right? It's a big deal when you move from renting to actual home ownership, so I get it, it's pretty exciting. But the fact is that about 40% of first-time home buyers said it was the most stressful event of their entire lives, and I'm honestly not surprised, since the whole process can easily become a minefield for first-timers who are clueless about all the potential mistakes they could make. But since you clicked on my video here, I assume you know better than to jump headfirst into such a big commitment. Let me give you my own MMM, right? The 3 big M's when it comes to expensive first-time home buyer mistakes. Those are money, mortgage, and market mistakes, all of which will go into detail in this episode. So let's start with money mistakes, right? As they're the ones that could potentially cost you an arm and a leg if you're not careful. First money mistake, buying a home when you have debt. Remember, buying your first home is like a marathon, so when you have debt, it's like you're running with ankle weights on. We definitely don't want that, okay? If you have credit cards or car loans or even student loan debt holding you back, work on paying them off first. After that, build up an emergency fund of 3 to 6 months worth of expenses. Once you have a handle on your debt and rainy day savings, that's when you can start working on saving up for a home down payment. And that leads to our second money mistake, underestimating the cost of home ownership. Don't forget, guys, you're going to have to deal with a lot of bills even after paying your first home. You're going to have to worry about the electricity bill, right? Maybe a gas bill, a cable bill, internet. You're going to have all these things that the bank doesn't care about when qualifying you for a mortgage. Oh, and don't forget about repair and renovation costs down the line. Real life is not really like the home renovation TV shows where everything's faster, cheaper, and easier, right? It's really not. To get past that illusion, work with your real estate agent to find out the neighborhood's property taxes and typical insurance. You can also ask for the seller's utility bills for the last 12 months the home was occupied, so you have an idea how much they'll cost after you move in. If you're interested in a resale home, you can do that. And even if you're interested in buying a new home, ask the new home builders, because they should have an idea of what the utilities, etc. will cost for their homes, even if you're building a new home. All this planning will also help you avoid the final money mistake, right? Which is emptying your savings. If you plan ahead and save accordingly, you won't have to end up in a hole every time a part of the house breaks, which always freaking happens. And trust me, there will be repairs in the future always with houses. I can guarantee you that. Next up, we have mortgage mistakes. I know mortgages can be a pain in the neck. Even the word itself sounds off. A mortgage. It sounds like a morgue and mortuary put together or something, right? It's a weird word in itself. Anyways, your mortgage can turn out to be a good thing if you know how to mind all the potential mortgage mistakes in your path. The biggest mistake is not shopping around for a good mortgage rate. There are so many mortgage lenders in the US, right? If you don't believe me, in 2019, there were actually 5,508 financial institutions handling mortgages. And this includes banks, savings associations, credit unions, and non-depository mortgage lenders. And all of them want your business. So you should really look around before signing on the dotted line. Some lenders ramp up closing costs to buy down your interest rate, while others that advertise low or no closing costs offer higher interest rates in exchange. If you're going to keep a mortgage for many years, it's best to opt for a lower rate and higher closing costs, in my opinion. If you plan to refinance or pay off the loan after a few years, it's best to keep closing costs low. So it just kind of depends on your situation. But of course, I'm not asking you to contact all 5,508 plus lenders, right? Because that would be impossible. But to whittle down that number, you can check out different offers online so you can prepare your own ideal mortgage terms. After that, contact 2 or 3 lenders and challenge them to match or beat your terms that the other one gave you. If you're not satisfied, there are always others to contact. But a good rule of thumb, in my opinion, when I do business is just to have 3 different options from 3 different financial institutions. That's a really great place to start. And while you're doing that research, right, watch out for the next mortgage mistake, which is getting the wrong kind of mortgage or lender. You see, there are different types of mortgages. Fixed rate mortgages allow you to lock in your interest rates, while adjustable rate mortgages have an APR that will change with the markets over time. So when rates go up, your payment could go up too. So personally, I like fixed rates. I think everyone could agree at this point in time. But hey, you'll also need to consider the term of your mortgage, right? Meaning how long you want to pay for it. According to lender Freddie Mac, roughly 90% of homeowners choose a 30-year fixed rate mortgage. That's because it generally requires less cash up front and offers lower payments month to month. But the trade-off is that you'll pay more interest over the long term, right? Choose what's right for you, meaning choose what you can afford to pay and save money on. A lot of the times, a 15-year mortgage term will actually offer a significantly lower mortgage rate if you can actually make the payment. So you might want to consider a 15-year and a 30-year when you shop around. As for the lender, you should look for someone who talks with you and not at you, right? That way you get multiple options to choose from for a down payment, a mortgage term, and other variables that go into buying a house. And really watch out for red flags like getting no explanation behind their financial recommendations. Like if someone's not going to explain something to you and take the time, you probably shouldn't go with that lender. And in general, if you feel like you're being rushed, to just look for a different lender. Right? Remember, you want someone who's going to educate you and guide you through the process, not someone who just sees you as like another piece of paper that they get commission from, right? All right, so now let's move on to the final mortgage mistake, right? That is ignoring all the helpful options like loan programs and first-time home buyer grant programs. There are plenty of low down payment loan programs out there, including state programs that offer down payment assistance and competitive mortgage rates for first-time home buyers. So definitely ask your mortgage lenders all about them, right? Some of them include like VA loan for people who've served in the military, the USDA loan for homes in areas that are designated rural by the U.S. Department of Agriculture, and the FHA loan that allows for down payments as small as 3.5%. And on that last one, the FHA loan, I just made a whole video about that, right? So you should definitely check that out. And I just released a couple videos about like the Chase Bank and the Bank of America down payment assistance, and they're giving out like $5,000 to $17,000 to help pay for your down payment. So don't miss those videos as well, right over there. Check those videos out. You can get a bunch of money for free because it's a grant. But hold on a second though, before you leave, right, we still have to cover the most important M, right, which is to watch out for market mistakes. If you've been watching my other videos or even just the news recently, you know that the housing market right now is on a crazy high while mortgage rates are near historic lows. That's why it's so easy to get carried away and commit colossal market mistakes, right? The first one you should avoid is allowing the market to dictate your moves, right? If you feel like you have to really buy a house now, it's worth taking a pause to figure out whether you're making an impulsive decision. Remember, this is a big money decision you're making, so you don't want to rush it. Regardless of low interest rates, if you don't have the cash for a down payment and the means to budget for a mortgage payment and other home ownership costs, then it's not the best time for you to buy a home. And anyways, most experts don't predict interest rates to rise anytime soon. And this brings us to our final home buyer mistake to avoid, which is getting desperate. The last thing you want to do is jump on the first house you can get just because you've been looking for a while and you're getting outbidded on the house that you actually want, right? Think about it. If you move into a house that you'll end up hating, you'd have to deal with an agent's commission and then the closing costs for the mortgage on your new house, right? You'd also have to deal with the hassles and expense of moving yet again. So take a breath. If you have time on your side, it's okay to wait until something that suits you comes along in the market. And as long as your demands are realistic for your budget, you are bound to find something you can actually live with. New houses come on the market literally every day, so you will find something, trust me. I mean, it's your freaking dream house you're working towards here, right? So you definitely got to be patient. Try to enjoy the experience of finding your perfect first home. And since it's so natural for emotions to come into play, you need to check them at the door and focus on making rational choices. Once you do settle into your first home, you'll thank yourself for not actually rushing the whole entire process. Are you actually looking for your first home right now? I want to know about it. Just drop a comment down below and I'll be sure to get back to you because I actually respond to my comments. And if you're interested in more first-time home buying content, then let me know so I can make videos about stuff that you guys actually care about. And lastly, I really try to make content around like comments that people are actually posting that they're interested in, right? So that way all of my content is super relevant and to the point so you guys can enjoy these free videos. So that's it for today's talk on the expensive first-time home buyer mistakes to avoid, all the costly money, mortgage, and market mistakes you should watch out for, and how you can avoid each one. And if you enjoyed this video, then I hope you can give it a like and actually share it with your friends and family so they can know about it as well. Again, this is Pierre Meggi, so thank you so much for checking out my channel where we just give out free value that has everything to do with the real estate industry or scaling your business as a real estate agent. But what I'm really most known for is how to teach new real estate agents how to leverage a sub-niche within the real estate industry called apartment locating. And apartment locating is super exciting because as a real estate agent, did you know that you can actually leverage your license and work from home to actually earn a six-figure income? That's why apartment locating is the hottest and most exciting real estate agent sub-niche in the market. So check out the links in the pinned comments or in the description if you're interested in that stuff. And I hope to see you guys on the next one. Don't miss this video right here. It's gonna freaking blow your mind.